And Lenin said, if you want to destroy the economy, you want to destroy capitalism, you botch the currency. So in 1971, just before I went to Vietnam, Nixon took the dollar off the gold standard. But they don't teach you that. You see, our system is communist.
What's up, everybody? I'm Jaspreet Singh from theminoritymindset.com, where money minds rethink rich. Ray Dalio, Michael Burry, and Robert Kiyosaki have a kind of grim outlook on things that we could see happen in the economy in the future. So what I want to do today is go over Ray Dalio, Michael Burry, and Robert Kiyosaki and talk about some of the worries and concerns that they have about the economy. So let's jump right into it. So Ray Dalio is the founder of Bridgewater Associates, which is one of the most successful hedge funds in history, and his hedge fund is what made him a billionaire. I'm a fan of Ray Dalio. I read his books, I read his articles, and one of the things that I really like about him is that when he makes his investment decisions, he doesn't just look at what trends are going on right now. He makes his investment decisions and really all of his decisions based on historical data. And so him and his company will look back hundreds of years and they will look at thousands of data points to analyze what's going on right now based on what has happened in the past, because although history might not repeat itself, it does rhyme. His philosophy when it comes to investing is to look at the data, and that's what has made him so successful, because he will look back hundreds of years and look at so many different data points to predict what's going to come next. And that historical research is why he is so worried about the future of the United States and our economy. So in this video, I'm going to be going over two different interviews that he had. One with MarketWatch back in September 2020, and the other with Business Insider that he did in February 2021. There's a lot of good information in here, and I'm going to talk about what he thinks is going on and what he says you can do right now to protect your finances. Ray Dalio says that life in the United States could become much more difficult in the future if our economy continues the way we are now, and this is going to cause three different things. First, massive debt. All this debt that we have in our country is going to stunt our future economic growth, and that is going to cause less opportunities for people. So the United States used to be the land of opportunity, and it still kind of is right now, but he predicts that that is going to change in the future because one of the reasons is this massive debt, which is going to slow our economic growth. So people are not going to look at the United States as the land of opportunity. And he also says that there's going to be a lack of trust in the United States dollar because of all the money printing, because of all the debt. And this is going to hurt the value of our dollars, which is going to lower our standard of living, because right now the United States dollar is the world's currency. It is very strong and very powerful. And if the trust in the US dollar starts to drop, then our dollars are not going to stretch as far, and people are not going to be able to afford the same standard of living with the amount of dollars that they have right now. He's saying that the United States needs to make systemic repairs to provide greater opportunity for more Americans to achieve personal growth and financial security. And if the United States does not do that quickly, he says that the consequences will be painful. What's really interesting is he says that a big change that needs to be made in the United States is how capitalism works. And this is interesting because capitalism and this capitalistic system is what made Ray Dalio so successful. But he says that capitalism needs to change in the future if we want to continue being an economic superpower, because capitalists and capitalism are able to grow the pie. They're able to create more wealth, but they don't distribute the wealth very well. And so he says that there needs to be a new system where there is a way to create more wealth, but there has to be a way to get more of this wealth into the hands of more Americans. The problems that he says are going to give the United States the most economic issues over the next 5 to 10 years are, according to him, number one, the money and credit cycle problem. I'm going to talk more about this. Second, a wealth and values gap problem. And third, an emerging great power challenging the existing dominant power problem, which means China is getting too much power, they're getting too strong, and their economy might pass ours. Over the last couple decades, we have been losing our competitive advantages against the rest of the world. What he says is, first, our education system sucks. What he's saying is that we've lost a lot of our education advantages relative to the rest of the world, and our share of the world's GDP, so our share of the wealth relative to the rest of the world, has been reduced, and the wealth gap in our country has increased, causing more political and social problems. And because of that, we're not spending our time in this country producing productive growth. Instead, we're just trying to figure out how we can live with one another peacefully. However, we still do have some competitive advantages. He says that, for one, innovation and technology is still strongest in the United States, but China is coming back strong with innovation and technology. That's why TikTok was such a major issue in the United States. If you remember, TikTok was created in China, and Donald Trump did not want TikTok to be happening in the United States unless TikTok was sold to the United States. Why? Because the United States is worried about China and their innovation and technology growth, because that's one of the biggest advantages that the United States has right now. So we don't want to lose that to China. Our second advantage over the rest of the world is our military power. But according to Ray Dalio, the United States is still the strongest, but China has been coming on very strong and is coming close. And the third advantage that we have is the United States dollar, because our United States dollar is still very strong and it is still the world's currency. However, his concern is we're printing a lot of money and we're taking on a lot of debt, which is hurting the value of our dollar, and at the same time we're also very late in our long-term debt cycle. If you're not sure what I mean by the long-term debt cycle, I already made a video explaining how our economic system works and what the long-term debt cycle is, and you can watch that video in the description below. So now if we jump in back to the top, the money and credit issue, because if you look at anyone's finances, your finances, my finances, any person's finances, if you have too much debt, if you have too much credit card debt, if you have too many cars, if you have too many things and too much credit, then this can stunt your growth, because now all your money is going out to pay your debt. Same with the business. If you start a business and you have way too much debt and you're not making enough money to pay off your debt, that is going to slow the growth of your business and it could kill your business. The issue that Ray Dalio says is many people understand how money and credit affect our personal finances and our business finances, but we don't see how money printing and debt affect a country's finances. In the interview, Ray Dalio compared the United States to the Dutch Empire and the British Empire, because they were very strong empires, but they came crumbling down because, one, they had created too much debt and money printing. They had lost educational advantages to the rest of the world. They had greater internal wealth conflicts, meaning a wealth divide. And then he said that there was greater challenges from rival countries. Does that sound familiar? Ray Dalio calls these four things: the money printing and debt, the educational losses, the internal conflicts, and challenges from other countries. Right now we're facing China. He calls these four things diseases, and he says they almost always play out the same way. And that's why he says that the British pound is no longer a reserve currency. He says everything has a life cycle. You're born and you die, and as you get older, you can see certain things that are symptoms of being later on in life. And he says that the United States is a 75-year-old empire, and it is now exhibiting signs of a decline. But if you want to extend your life, there are clear things that you can do. That means if we want to stay the world superpower, there are things that we can do, but these are things that you may not want to do because they're not easy to do. And one of the things that you can do, which he says is very clear, is you have to do a pretty big debt restructuring. The United States between 2020 and 2021 printed trillions of dollars and took on trillions of dollars of national debt to get our economy back going after the pandemic and recession. And this money printing, while it gave people stimulus checks and while it gave businesses bailouts for the short term, they're going to have long-term consequences. And that's one of the things that Ray Dalio is really worried about, because we're already really late in our debt cycle. We're already becoming an older country and an older kind of economic system. And that is the last thing that we need if we want to continue living as the world's superpower economically. And so one of the things that you have to do if you want to reduce your national debt is cut the spending and start living off of money instead of just credit. Because debt cannot create wealth. You have to have real productivity to create more wealth. But right now, all this wealth that's being created is just through cheap and easy debt. And so if we want to kind of reduce the debt that we have, we need to start getting rid of some of our expenses, pay down the debt, and that might even mean raise some of the taxes so we have more revenue. But from what it seems that Ray Dalio is saying, you have to balance that with less spending, and the government is not very good at cutting costs. They tend to raise taxes and raise expenses. The reason why this is so important is because right now our United States dollar is being challenged as the world's currency. And if that's the case, what he's saying is over the next 5 years, you could see a situation where foreigners who have been lending money to the United States won't want to, and the dollar will not be readily accepted for making purchases in the world as it is now. He says, look at the United States like an investment. If you were to invest your money in a person or a company, what are you going to look at? You're going to look at their income statement and their balance sheet. And so if a company you want to invest in is making more money than they're spending, then this might be a good investment. But the United States States right now is spending more money than they're making. So you have your revenue right here and you have your expenses, which are bigger than your revenue. And if this continues like this, then he's saying that people are not going to want to continue investing their money into the United States because they're going to say that the United States is a risky investment. They're spending more money than they make and they keep increasing their expenses and they're not doing anything about the income. And this is going to cause a long-term issue because people will not want to put their money into the United States, and that could also hurt our economic growth in the future. The way you fix that, according to Ray Dalio, is by increasing productivity and equal opportunity, because right now we have so many people that are busy fighting for their cause. You have a lot of people that feel like they're left out in the economy, so many people that feel like they're left out in the country, and because of that, our productivity as a country is dropping. And so because so many people do not feel like they fit in, we have a lot of people that are not producing for the economy. And so it goes hand in hand. Yes, there are social justice issues, and these social justice issues are now causing issues in the long-term health of our economy. There's a lot of division in the United States, from financial issues like the Occupy Wall Street movement we saw happen, and then social issues with the Black Lives Matter movement and the Asian hate issue that's going on. And so there's a lot of issues, and this is causing a divide in the country, and that is not good socially, and is also not good economically. The United States is one big team, economically and socially, and when a team does not get along, a team can't win. I mean, think of it like a football team. If the quarterback does not get along with the receiver, then the quarterback's not going to want to throw the ball to the receiver. Now you only have a running game, and you can't win a game if you only have a running game, because the defense is going to know how to stop you every single play. So we have deep issues here on the money and credit side of things, which is also being fueled by the issues here on the wealth and value gap side of things, because we have all the social issues and we also have wealth division issues. Going deeper into the wealth gap that we have now, Ray Dalio says that capitalism and capitalists are good at increasing and producing productivity to increase the size of the economic pie, but they're not good at dividing the economic opportunity pie. Socialists are generally not good at increasing productivity and the size of the economic pie, but they're better at dividing the pie. So what he says is we have too much emphasis right now on distributing wealth and getting it from producing debt and printing money, and not enough from actually increasing productivity, because wealth, pay attention to this, wealth cannot be created by creating debt and money. Again, it goes back to that same kind of team principle. If people don't feel like they're on the same team, they're not going to want to work together. He goes deeper into this inequality issue on the Business Insider article. I have that here. And he says that America's jarring inequality is a, quote, national emergency. And he says that inequality as a tipping point. And this is going to fuel more hate, more antagonism. And so he's really worried about that, not just socially, because nobody wants to live in a world where they don't feel accepted, but also economically, because this is going to hurt the strength of our economy. And this could hurt the strength of the United States as a world superpower. A lot of the social issues that we have right now are tied to financial issues, and the solution, according to Ray Dalio, is that capitalism needs to change. He's saying that the system that made him a billionaire cannot continue the way it is. Essentially, he's advocating for a way to continue growing the economic pie through some sort of economic capitalistic system, but also have a way for people that are underserved to have an opportunity to earn a bigger piece of the pie. Now I'm jumping back to this MarketWatch article. Essentially, he's saying that the key here is this pie, this piece of the pie has to be earned from people through equal opportunity, because you cannot create wealth through debt and money printing. Because a lot of the things that we've seen happen in 2020 and 2021 to help distribute wealth was through money printing. Things like stimulus checks, things like bailouts to help continue fueling the economy. But he says that's not a way that you can build any wealth. Wealth has to be created through production and through creating value. It cannot be created by just printing money, because that's a cost that we're all going to have to pay in the future through all the issues that I've been talking about. And how do you encourage more production and value creation? Well, this goes back to education reform, because like I said earlier, the United States education system sucks relative to the other world superpowers. And so something has to be done with our education system to encourage people to create more value, to go out and become entrepreneurs, to create things, to create more value and do more things, because at the current rate, we are not going to be able to sustain our economy and sustain our kind of world economic superpower the way it is, according to Ray Dalio. I'm back on the Business Insider interview for this one, and he says that there is a, quote, Thucydides Trap. He said that this is the historical pattern of conflict that comes up when an emerging player threatens a global power. In this case, China challenging the US, and he says, quote, I've watched the story play out. and is playing according to the script, and it's very difficult to imagine a cohesive resolution of that story. Now, if you're like me and you're not sure what a Thucydides trap is, don't worry, I got the definition for you right here, and if I'm pronouncing it wrong, I'm sorry. The term Thucydides trap is based on a quote by the ancient Athenian historian and military general Thucydides, and he said back during the Peloponnesian War that a war between Athens and Sparta was inevitable because of the Spartan fears of the growth of the Athenian power. So because the power in Athens was rising, a war between Sparta and Athens was inevitable. So when we're talking about a Thucydides trap, now we're talking about a tendency towards war or conflict between an emerging power which is threatening an existing power. Now, as a little disclaimer, I'm not saying this is what's going to happen, and Ray Dalio is also not saying that there's going to be a war. What he's saying is this is an issue that we need to pay attention to, because right now, according to Ray Dalio, we have a lack of trust in the United States dollar, and this trust is going down because of all the money printing and all the debt. Now, in addition to that, we have the United States losing some of their competitive advantages. So we are ahead in innovation and technology, we're ahead in the military, but China's coming very close. At the same time, we're losing our spot, and we've already lost our spot as the leading educational country in the world. We are already losing our share of the world's GDP, and the wealth gap within our country is getting bigger, and all these things coming together with the Chinese economy growing is an issue that Ray Dalio wants us and the country to pay attention to. So now at this point, what do? Lucky for us, Ray Dalio has 3 recommendations on what you can do right now with your money. So let me clean off the whiteboard and put it up here. The first thing that Ray Dalio says that you need to do is stop hoarding cash. This is me paraphrasing what he said. What he actually said was worry as much about the value of your money as you worry about the value of your investments. He says that the printing of all this money that we have should make you worried about the value of our dollar, which is why asset prices have gone up. Stocks, real estate, gold, all these things have gone up because of all the money printing. And then he says that you do not want to own the thing that you think is safest. Cash. In other words, he's calling cash a liability. So you want to have cash for your savings, right? You want to have cash for an emergency, but after that, you don't want to just hold on to cash just to hold on to it. He wants you to convert your cash into other assets, things that will grow in value, because he's worried that the value of your cash is going to drop because of all this money printing and because of all this debt. The second thing that he wants you to do is to diversify your assets. Now, so you're going to take your cash and you're going to put it into assets, but he doesn't want you to put all of your cash into one asset because he wants you to be prepared for anything, and the way he says you should diversify is pretty interesting. He says you want to diversify not just in assets, so not just stock market and real estate and gold, but he wants you to diversify in different assets, different currencies, maybe that means cryptocurrency, but also different countries as well. The whole reason behind this diversification, according to him, is because he says that wealth isn't really destroyed, it just shifts, because when something goes down, something else goes up. And so you want to make sure that you have your money in different baskets, different types of diversification. That way when something's going down, something else should relatively be going up. And he says that you should be worried about the value of your cash. And the third solution, which wasn't really a solution that he said, it was just something that he kind of mentioned towards the end of his interview, is that you need to understand the value of things, because in the United States, we have a tendency to value things based on dollars. You look at gold and we value gold based on the value of dollars. We look at cryptocurrency, we value it based on dollars. We look at real estate and we value it based on dollars. And he says that we need to stop doing that because there's an issue or potential long-term issue with the value of our dollars, because when people don't have money, like what we saw happen during the 2020 and 2021 recession, the government just prints more of it. And when you print money, no one really feels the immediate cost of that because the government doesn't have to take this money from anyone. They just print it. And so we can print more money, but eventually this is going to come up to a cost that we have to pay. And when the government has to take money from people like you and me to pay this cost, that's going to be much harder to do because nobody wants to give their money away. And so there's a cost to all this money printing. And so you have to understand that when more money is printed, the value of our dollars get diluted. So you do not want to just keep valuing everything based on dollars, because he says that the value of our dollars are going to drop because of our lack of production relative to the amount of money printing that we're doing. We're going to jump back into the video in just a second. But before we do, I want to talk to you about our Market Insiders program, because if you're interested in investing your money in the stock market and the real estate market, our Market Insiders program can really help you with that. Market Insiders is not a class. It is a weekly group coaching session. Every week, you're going to get access to a live class where you'll learn something about how to invest your money in the stock market and the real estate market. And because these classes are live, you will be able to apply what you learned to the real world. So for for example, let's assume that this week's coaching session is on the topic of how to read a cash flow statement. That means for the first half of the class, you might go over what is a cash flow statement, how to find a cash flow statement, what it means, and how to understand it. And for the second half of class, if Amazon released the earnings statement this week, you might actually go over Amazon's cash flow statement. That way you can apply what you learned, since all of these coaching sessions are live. The real estate coaching sessions work the exact same way. You're going to go over a lesson like how to understand the cash flows of a property or how to find an undervalued property, and then you're going to apply what you learned to today's market. As soon as you enroll in Market Insiders, not only are you going to get access to our stock market and our real estate coaching sessions, but you're also going to get access to our stock market beginners class for free that will walk you through everything you need to know to get started investing your money in the stock market. And you're also going to get access to all the previous coaching recordings, that way you can go back and learn more, and you're going to get access to our private community of serious investors. This is our exclusive Discord community that's made just for Market Insiders, and you can go into this community, network with other investors, and you can ask your questions. When I was working to create Market Insiders, there were two things that were very important to me. First, the coaches, because I wanted to make sure that the teachers were real investors, and second, the pricing, because I wanted to make sure that it was very affordable. First, talking about the teachers, all of our coaches have been vetted. These are not some random gurus that we found. These are real investors, people who have been investing their money for years, people who've gotten great returns, and people who have the money behind them. We're talking about hundreds of thousands, if not millions of dollars invested themselves. So these are real investors who are doing what they teach. And on the price side, it was very important to me that Market Insiders was an affordable program. I didn't want to create a program that would cost you $1,000 or $900 to get started with Market Insiders. I mean, it costs less than the price of dinner for two if you want to get started with Market Insiders. And you don't even got to take my word for it, because I know there's a lot of crappy products on the internet. You can try out Market Insiders for free. We have a free 10-day trial where you can go through the entire Market Insiders program, and then you can decide if it's right for you or not. During this free trial, you're going to get access to everything. You're going to get access to our group coaching sessions, you're going to get access to our free stock market class, you're going to get access to our previous recordings, and you're going to get access to our private community of investors. This way, you can try it out and then decide if it's worth the money or not. If you start Market Insiders, you try it, and then you realize that you hate it, well, then you can cancel your membership during your free trial and it won't even cost you a penny. But if you start Market Insiders, you try it, and then you love it, well, then you can decide if it's worth it or not for you. This way, you literally have nothing to lose. So if you want to learn more and get started with your free 10-day trial to Market Insiders, I'll put the link to where you can get started and join with the free trial in the description below. Ever since we started to see housing prices and grocery prices and car prices grow, the Federal Reserve Bank kept coming out saying that this inflation that we're seeing is not real. It's just here for a short period of time. First, the Federal Reserve Bank said this high inflation was temporary and that it would, quote, wane. Then after that, the prices of things started skyrocketing and people got very skeptical, so the Federal Reserve Bank came out again and they said that they think that this high inflation is still, quote, temporary, and they even got the government behind it, because then President Joe Biden came out and he said that inflation is temporary and that the Federal Reserve Bank should do whatever it deems necessary for the recovery of our economy. Now, the interesting thing about this type of temporary or transitory inflation is it doesn't give us a time span. We don't know what temporary means. I mean, even Wall Street Journal came out and they dug deeper into this, and they said that the Federal Reserve officials see this transitory inflation lasting quite a while. So it's kind of impossible for us to understand if transitory inflation means 2 months or 20 years. Well, after the Federal Reserve Bank's latest meeting, they stuck to their guns. They said that yes, inflation is a little bit higher than what they expected, but they still believe that this inflation is temporary and they expect it to cool down. But Michael Burry called BS. He says that the Federal Reserve Bank is, quote, lying. Let me go over an NPR article that covers what happened. At the end of their most recent reading, the Federal Reserve Bank that inflation is expected to be something around 4.2% by the end of 2021, which is higher than the estimate of 3.4%. And the reason why we're seeing this higher inflation, according to the Federal Reserve Bank, is because of the supply chain bottlenecks and shortages because of the pandemic. There are 3 main issues that Michael Burry has. One is the amount of inflation that we're seeing. He says that the Federal Reserve Bank is lying about the amount of inflation. Second is the cause of inflation, because the Federal Reserve Bank is blaming it on supply chain issues. Michael Burry says it goes a whole lot deeper than that. And third is how fast we're going to cool down from this inflation, because Michael Burry says we have more inflation coming. So let's jump into Michael Burry's reasoning. And if you are interested in learning more about how to invest your money in the stock market, you can get a free 10-day trial to our Stock Market Insiders program, which is a weekly group coaching program for stock market investing. You get access to a weekly mentorship call with one of our stock market coaches who's been investing for years and has at least 6 figures, if not 7 figures, in the market, so they know what they're doing. You get to ask them questions, and you get access to an exclusive community of serious investors. You can try it out for free with a 10-day trial. So if you're interested in being a stock market investor, not a trader, this is not made for traders. This is made for people who want to be fundamental investors, who want to know how to research companies, how to analyze companies, how to read cash flow statements, how to understand earnings calls, and how to find an undervalued company. If that's something you're interested in, you can try out Stock Market Insiders for free with a 10-day trial using our link in the description below. After the Federal Reserve Bank told you what I just said about inflation, Michael Burry went out onto Twitter and he tweeted, quote, regarding inflation. So, at Federal Reserve, are you lying to us or are you lying to us? And then he quoted an excerpt from a Wall Street Journal article. In the second part of his tweet, the excerpt, I'll explain what this means in just a second, but Michael Burry essentially talked about how Jerome Powell openly misconstrued the data to make it seem like inflation is way lower than what it actually is, and this is why he says that the Federal Reserve Bank is lying to the American people. Now, in order to understand what this article is talking about in the Wall Street Journal, you need to understand the difference between CPI and PCE. These are two different inflation measures, and CPI is also known as the Consumer Price Index. When most people are talking about inflation, they're looking at the CPI index. This essentially tells you how much inflation that there is, and when the CPI index tries to factor in how much inflation that we're seeing, they average out 8 different industries. I'll just show you a chart from Investopedia so you can see what these industries are. They include apparel, so clothing, transportation, education and communication, so college education, other goods and services, recreation, meaning things like gym memberships, medical care, food and beverage, and housing. So the CPI index looks at those 8 different categories that I just talked about, and then to see whether the prices went up or down, and based off of that, they come up with their own inflation number, and this kind of gives you a gauge of how much inflation you're seeing on average across the board in the country, because most of our expenses fall into those 8 major categories. So when you hear the news talking about inflation going on, they're usually focusing here on the CPI index, but the Federal Reserve Bank doesn't look at the CPI index. Instead, they look at something called the core PCE index, which stands for the core personal consumption expenditure index, and the core PCE index looks at something very similar to the CPI index, except PCE, the core PCE, does not look at the cost of food and does not look at the cost of energy, so things like gas prices. This is not included in the inflation numbers that the Federal Reserve Bank looks at. Why? Because they feel that this gives a better gauge of the inflation that regular people are seeing. Although, energy costs do factor into the price of everything you pay at grocery stores, because if gas prices go up, that means trucking costs go up, which means shipping costs of all your groceries go up, which means the price of your groceries are going to go up. And food costs are obviously a factor that a lot of people have to deal with, but the Federal Reserve Bank feels that this is a better index for them. Now, this is where it gets really interesting, because if we dive into the Wall Street Journal article that Michael Burry was referencing, titled Inflation's All Over the Place, it says, quote, when coming up with inflation numbers, Mr. Powell used a gauge from the Dallas Fed that throws out the top 31% and bottom 24% of the personal consumption expenditure PCE price changes. What that means is when the Federal Reserve Bank was coming up with their own inflation numbers, not only did they look at the PCE number, but they looked at a derivative of the PCE number. What they're saying is they looked at the PCE number, they took out the top inflation numbers that they saw, they took out the bottom inflation numbers that they saw, and it looked like inflation wasn't that much. So what they did is they created a chart like this with a whole bunch of data points of all the different inflation numbers that they saw. They saw that some things did not grow in price that much, and some things grew in price by a whole lot. This is the PCE chart that the Federal Reserve Bank looked at. Then what they did was they said, you know what, we're going to remove all of these. So the top 34% right here, 34%, they just removed it off of the chart because they said that this was an outlier. And then they also went out and they removed these data points right here because they said that this was also an outlier. So they removed the bottom 24%. So now it looks like inflation didn't really grow that much because he took out the extremes and he took out way more of the higher extremes than he did the lower extremes. This is what Michael Burry is talking about. Not only did they look at the PCE data, but then they took a derivative of this data because they got to pick and choose which inflation numbers they wanted to look at, and because of that, they're able to come out and say that inflation isn't as high as a lot of people think it is, although you're the one that's paying the price when you go to the grocery store and have to buy a car and have to buy a home, because the Federal Reserve Bank, when they're looking at inflation data, they're skewing it, and this is public data. This is what Jerome Powell, the chairman of the Federal Reserve Bank, said. He said that they looked at the PCE data, they removed the top, they removed the bottom, and then they looked at the average right here. Let me show you what this chart actually looks like so you can see the difference. So the Wall Street Journal shows two charts in the same article. One has the trimmed PCE inflation numbers that we just talked about, where they removed the top and the bottom, the top 31% and the bottom 24%. And you can see that between 2013 until now, inflation looks pretty even. It looks like inflation hasn't happened that much. And then the Wall Street Journal shows a second chart created by the Federal Reserve Bank. This was also a trimmed PCE calculation, but this one they trimmed the top 16% and the bottom 16% to make it a little bit more even. And you can see that between 2013 until now, we've seen a lot of inflation, and a lot of it happened after 2020. I mean, you can just see that peak just boom, straight up. So now if we go back to what Michael Burry said in his excerpt, what he said will make a lot more sense. The excerpt says that when the Federal Reserve Bank is looking at their inflation numbers, they're throwing out the top 31% and the bottom 24%, and this is the reason why the Federal Reserve Bank is able to come up with their inflation numbers, saying that inflation is not that high. And then he goes on to say that even if you look at the alternative measure, where you just remove the top 16% and the bottom 16%, you'll see that there's no support to the idea that inflation is already starting to come back down, because inflation is still going up, and according to Michael Burry, we're just getting started. So this is why Michael Burry says that the Federal Reserve Bank is lying to us. They're skewing their own data to make it seem like inflation is not that high, and because of that, they can continue with their money printing. They can still justify all the things that they're doing to continue printing money and injecting this money into our system to continue ramping up inflation, because according to them, hey, inflation isn't that bad, but the real inflation that people are seeing is way higher than what the Federal Reserve Bank says, because they can just create their own data. But this is where it starts to get even more interesting, because now you have to ask the question, why? Why does the Federal Reserve Bank want to skew the data to make it seem like inflation is not as high as it actually is? To understand that question, you need to really understand what the Federal Reserve Bank is, because although it's called the Federal Reserve Bank, it's not really a bank, because you and I can't go there to deposit money. And it's not a reserve because they don't keep cash reserves, and it's not federal. It even says so on their website. They are a separate entity from the government, and they have a lot of influence from very wealthy people, like banks. The Federal Reserve Bank's job is to monitor the monetary supply. And one of the ways that they do that is by making sure that big institutions like banks are well funded and make sure that they have the cash. That way they can keep the credit system alive, because if you go to the bank and you cannot get your cash out because your bank loaned all their money out, because Bank of America got a whole bunch of people wanting loans, so they loaned all their money out, that wouldn't look very good. So the Federal Reserve Bank makes sure that banks like Bank of America have access to cash. That way they can keep giving you your deposits back, and they make sure that these institutions have access to money that they can continue lending out, because if banks don't have money to lend out, the economy will slow down. So the Federal Reserve Bank really works to make sure that our monetary system keeps running the way that it is. And since that's what the Federal Reserve Bank wants to do, they will be willing to do whatever it takes to make sure that these banks and big institutions are well funded. Like when we saw the 2020 crash happen, we saw the stock market in free fall because everybody was worried about the economy. Everybody was worried about the pandemic. Nobody knew what was going on. Well, that's when the Federal Reserve Bank came out and they started a program where they said that they would print an unlimited amount of money, unlimited quantitative easing, where they would just pour money into the markets. They would pour money into these big institutions. That way, even if they had bad assets that were worth nothing, these institutions could sell these bad assets to the Federal Reserve Bank, and the Federal Reserve Bank will continue paying them top dollar, because the Federal Reserve Bank has the ability to print money on command. So when we saw the stock market in free fall, you saw it all of a sudden turn around and go back up, because the Federal Reserve Bank opened up the money printer and they promised that they will do whatever it takes, meaning unlimited money printing, unlimited quantitative easing. That's what they said. And they will continue just funding money, pouring money into the markets. That way investors feel confident putting their money in the market. Now, this money printing comes at an expense, because our money, our paper dollars, are really just a piece of paper. It is a piece of paper that's not backed by gold or silver or anything tangible, and because it's just a piece of paper, the Federal Reserve Bank has the ability to print this money essentially on command. Now, there is a cost to free money. In fact, some of the most expensive kind of money that there is free money, because as you print more and more money, yes, you can inject more money into the system, but this causes more inflation. Because as more and more money is printed, the value of each individual dollar that you have goes down. So now for the average person, the value of your savings isn't worth as much, your paycheck isn't worth as much because the Federal Reserve Bank has printed so much more money. So this money gets printed, it flows into these big institutions, and now the average person is paying the price through higher inflation because now your savings and the money that you're making from your job don't have the ability to buy as much stuff because your groceries are more expensive, your vacations are more expensive, your healthcare costs are more expensive, your rent and your mortgage are more expensive because home prices have skyrocketed, and so you're seeing more and more inflation because of the money printing. And now this brings us to the question of now, if this money printing is causing inflation, why does the Federal Reserve Bank not want to say that we're seeing more inflation? Well, at the time of me recording this video, the Federal Reserve Bank is still printing something around $120 billion every single month and pouring this money into the markets. Every single month, the Federal Reserve Bank goes out, they print another $120 billion, and they inject this money into markets and institutions so investors feel confident investing their money into stocks and investing their money into bonds because they know that the Federal Reserve has their bank. If you know that the Federal Reserve Bank will bail you out no matter what, you're going to feel a whole lot more confident putting your money into the stock market, and they believe that this will help stabilize the economy. Now look, there is a benefit to having a strong stock market because when people feel wealthier, you're going to be more willing to go out and spend money. If you feel that you're really wealthy because your stocks are soaring and you're more likely to go out and spend money, that's good for the economy because now businesses will be making more money, and if they have more money, they'll be willing to reinvest and hire more employees and grow their company. But if people are not making money in the stock market, they're going to be less likely to invest. But on the flip side, there's also a cost for the Federal Reserve Bank printing $120 billion every single month and injecting this into the market because on one hand, you have a market that's reliant on the Federal Reserve Bank printing money and keeping it afloat. And secondly, you have an economy where our dollars are losing value each and every day, and every single month that the Federal Reserve Bank prints more money, every single time they print another $120 billion, the value of your savings, the value of each dollar that you earn goes down just a little bit. Now at this point, the obvious question everybody will have is, so why doesn't the Federal Reserve Bank just pull the plug? Why don't they just stop pouring money into the market and let the market do its thing? I mean, we saw the same thing happen after the 2008 crash. After the 2008 crash, the Federal Reserve Bank started printing money like crazy. They started pouring it into the market. That way the stock market would rebound. That way people would feel more comfortable pouring their money into the market. And then one day, the Federal Reserve Bank said enough's enough. And then they pulled the money printer and they stopped pouring money into the market. And we saw a small stock market crash. It was called the taper tantrum because, investors had a tantrum when they heard that the Federal Reserve Bank wasn't pouring more money into the market, and that caused a small stock market crash. So now the Federal Reserve Bank is worried about the same thing. They don't want to see another taper tantrum happen, so they don't know what to do. That's why they're continuing to pump money into the market. They want to continue to see inflation happen, but they don't want to see super high inflation because if inflation was super high, people would panic, they would get worried, they would start attacking the Federal Reserve Bank. And so they're saying that inflation is high, but it's not super high, because they take out all the high numbers. Because of that, they have more justification to continuing following their measures, meaning continuing pumping free and cheap money into the market, keeping interest rates very low, keep pumping money into the markets. That way people feel confident in the economy because they believe that if you keep money cheap, it'll be easier for the economy to grow and get up and running. But all this comes at a cost, because the government will have to pay all this money back plus interest, which is one of the reasons why now President Joe Biden wants to raise taxes, because if you raise taxes, they'll have more tax dollars, and now more of your tax dollars are going to be going to pay back the government's debt plus interest. Not to mention the fact that the Federal Reserve Bank and the government want to see more inflation because inflation makes the value of a dollar less, which makes it cheaper for the government to be able to afford their debt that they have. Now, the government and the Fed don't like to talk about this, but the reality is if we see less inflation, if we start to see interest rates go up, now all of a sudden, this $28 trillion worth of national debt that the United States government owes becomes a whole lot more expensive because the government is going to have to use more valuable dollars to pay off their debt. But if you see more inflation and cheaper interest rates, now this $28 trillion worth of national debt that the US has is more accessible to pay off because now the government is paying down their debt with cheaper dollars. So if dollars become more powerful, more valuable, this debt becomes a whole lot more burdensome on the United States government, which is why the government and the Federal Reserve Bank want to continue to see low interest rates, and that's why they want to continue to see cheap money, because it makes it easier for the government to continue making their debt payments, especially at a time where our economy is still slow. Our economy is still struggling to get up and running, even though, yeah, it's way better than it was back in 2020 when the economy was shut down. But compared to our debt levels, compared to where we need to be, our economy isn't growing as fast as we would like, which is why you're still seeing stimulus by the Federal Reserve Bank, which is why you're still seeing the government working to get the economy moving and getting people back to work. And this is why Michael Burry says that he's worried about more inflation happening, because the Federal Reserve Bank is skewing their numbers right now to make it seem like inflation is less. That way they can continue justifying all their money printing, and all this money printing is going to eventually add up because we just keep adding more inflation, adding more inflation, adding more inflation, which is diluting the value of our dollars, which means that while the Federal Reserve Bank says that we're going to see less and less inflation and the price of things are going to go back to normal in just a few months, or maybe in 2020, the price of things are going to go back down drastically and everything will go back to normal because the supply chain issues will be better, Michael Burry says no. He says that we're going to see more inflation because, yeah, maybe inflation will slow down when we start to see the money printing die down, but that doesn't mean the price of things are going to go back, because according to him, it's not just the supply chain issues causing inflation, it's the dilution of the value of our dollar caused by the Federal Reserve Bank, which is causing the inflation that we're seeing right now. So what do? For one, get educated about money, because inflation hurts the people who are not financially educated and it benefits the people who are financially educated. So start learning about money.
I want to start by talking about the current state of the economy, because I think millennials have gone through a very crazy 2000s. We started off with the 2000 stock market .com bubble crash. Going to 2008, we had the real estate meltdown, which essentially almost brought down the entire financial system, a once-in-a-lifetime crash. Then come 2020, we had another once-in-a-lifetime pandemic crash. And now it looks like a lot of experts are saying that the money printing and stimulus and other efforts by the government were able to get us out of this pandemic and recession. So I want to get your take on this. How are we doing as an economy right now?
The scientific financial term is we're screwed. I went to military school. So I graduated in '69. I went to flight school in Florida. I was flying in Vietnam. And the reason I tell you all that is because suddenly one of the most valuable courses I took at the academy was Marx, Lenin, Mao, Hitler, Stalin, Lenin, and I'm flying, I take off from the carrier, where I was a gunship pilot, helicopter gunship, so we'd fly escort we'd fly with the troop transport helicopters. So there was always like two gunships escorting the troops into battle. And that was the first time I saw history of what I was taught at the academy in real life. I went, oh my God, this stuff about Marx, Lenin, Mao, Stalin, Hitler is true.
What is that? I mean, for someone who's unfamiliar with Marxism, what is that?
Well, Marx had one thing. He said it was the abolition of private property. In other words, we could own nothing. And as a capitalist, that kind of upsets me a bit, So they wanted to take all of our private property away, and it would then go to the state. And that's why when you study communism and Marxism, it's a centralized economy. It's central. It's called, in military terms, it's called command and control. I went to military school. So it's a command and control economy where the government tells you everything. And so that's why the Federal Reserve Bank is part of a communist thing. It's a central bank. And the central bank is not American, it's not a bank, and there's no reserves in it. And it's the Fed today, in 2021, is the third central bank. And for history, since Jefferson and those guys, they kept saying, we cannot have central banks. But because our academic system is basically Marxist, most school teachers are Marxists, they just don't know it, because they didn't study Marx like I did.
So you're saying our school system teaches communism?
Yes. And most people don't know that because they don't tell you that. Just like they didn't tell you that my family was locked up in concentration camps.
Wow.
They hide all that. I've been called a racist so many times. I go, well, how would you know if I'm a racist or not? But the worst thing was I was called a white supremacist, and I looked in the mirror and I went, no, I'm still not white. So it's so crazy right now. I mean, this is nuts right now.
Yeah.
Anyway, flying along the beaches of Vietnam, I saw history. And history is today. So we're here in Scottsdale, Arizona. And I was driving past the Scottsdale Fashion Market. It was all boarded up. It was burned, attacked under the name of Black Lives Matter. I'm going, well, Marx and Hitler, as you know, were racists. And so this whole thing about what I was taught at the academy, I went to Merchant Marine Academy in New York. I had appointments to Naval Academy and Merchant Marine Academy, but I took Merchant Marine Academy because we're the highest paid graduates in the world. You know, $120K a year was a lot of money back in 1969.
Oh yeah, it's still a lot of money now.
I'm a capitalist. I don't have a job. I don't have a paycheck. It's so opposite because that was my rich dad teaching me, and my poor dad said, get a safe, secure job. So the mindsets are completely opposite.
Yeah.
And so that's why, excuse me, when I was watching your program and you're telling me about your dad said become a doctor, I was just cracking up because Asian culture were Asians.
Yeah.
Yeah. And the most important thing is you become a doctor, and then I'm flunking out of school left and right because I'm a dumb shit. And then my mother was a registered nurse. She says, oh, they call me Bobby. Bobby, become a doctor. My father says, he's a dumb shit. He's flunking out of school. I flunked out of school twice because I can't read and write. Now, ironically, my book is Rich Dad Poor Dad is number 20 in the world.
You can't read and write, yet you're a best-selling author.
Correct. It's not that I couldn't read or write. The teacher didn't like what I said. What I wrote, they forced me to read these stupid books. And I said, these are horrible books. These are horrible books. Why am I supposed F, 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 F. So my chances of going to college are almost none. If you can't get into University of Hawaii, which University of Hawaii turned me down too. So here I am, I'm like 16 years old, 17 years old, I'm a surfer, in Hawaii and all this stuff. And I'm going, so my poor dad, the PhD, poor, helpless, desperate, says to me, he says, I'm not going to pay for your college education. I said, well, I didn't expect you to. Because, that's, in the Asian family, that's what he's supposed to do. Mm-hmm. And I said, I don't want you to. I can get my way through school. So that's why I applied to a Naval Academy at Annapolis, and I applied to Kings Point at Kings Point, New York, because I really did want to go to sea. The only A subject I ever got was in wood shop. I built a boat. Other kids were building salad bowls for mommy and daddy. And I built an 8-foot El Toro racing class boat. My degree is in naval architecture, which I've never used.
That's crazy. So, if we jump into the school system, exactly what you're saying. My parents were immigrants, came to this country with next to nothing. My dad came to this country with $100 or less than $100. Didn't know the culture, didn't know the people, didn't know how things worked, but he bust his butt. And for him, my parents, the whole American dream was work hard, become successful. And they didn't grow up with any financial education. And so my parents, like a lot of Indian immigrants, said that if you want to become successful, you need to follow the system. Study hard in school, get good grades, become a doctor. My dad used to actually tell me that when you're in school, don't worry about English, don't worry about social studies and all that. Focus on math and science, because that's what you need to become a doctor. Work on those two things, and if you do that, you will become a doctor. If you become a doctor, you'll make a big salary. If you make a big salary, you'll be able to save a lot of money, and if you can save a lot of money, you will be wealthy. How do you know any better? Why don't they teach this in school?
Because it's a Marxist system. I hate to say that. If you study Marx, Lenin, Stalin, Hitler, and Mao, the central bank is Marx. And Lenin said, if you want to destroy the economy, you want to destroy capitalism, debauch the currency. So in 1971, just before I went to Vietnam, Nixon took the dollar off the gold standard. But they don't teach you that. You see, our system is communist. And I hate to say that because I'm a Marine. I went to Vietnam twice. I fought for this country, went to military school. Like I said, my family were locked in internment camps. And today they're talking about reparations for the blacks. Give me a break. My family didn't get reparations. They took all their land, they took their houses, they took everything from them. But what history doesn't tell you is that Hitler rose to power on reparations. Why don't they teach us that stuff? So that's why I learned at military school. So today I hear all the blacks talking, man, racism is terrible. You've experienced it, I've experienced it, And racism is, it's a sin of the soul. spiritual. It's spiritual to judge a man or a woman by their skin. That's horrible. But anyway, if you study Marx, Lenin, Hitler, and Mao, you'll see it all over the school system. That's what today's postmodernist education, and postmodernist education actually started in 1930. When out of the Frankfurt School in Germany, they moved over to Columbia University. And Columbia University is the headquarters for Marxism. But they don't tell you that. And so the Teachers College at Columbia University is where the Frankfurt School set up in 1930, which is Marxism.
Wow. And another thing that I found was really interesting, I was reading something that you wrote, because millennials nowadays, young people, one of their biggest liabilities.
Student loans.
Student loans.
Yep.
And
that was Obama. Obama's a hardcore Marxist. I'm not a racist by calling him that, but he is. Look at Obamacare. You know, what Stalin, who said, medicine is the archstone of socialism, socialized medicine.
Wow.
And education fits into that same category. That's why, going back to what you and I are taught.
Yeah.
So I'm sitting in school with all these rich white kids in Hawaii, right? Just because of the way the lines fell and, you know, the school districts and all this.
Yeah.
My classmates are all these white guys who are rich. And I'm this Asian guy who's poor. And my old man, poor dad, PhD, poor, helpless, desperate, is saying, you've got to get a high-paying job, you know, as a school teacher. I said, Dad, you're still not rich. And so I wanted to know why the white guys were rich and the Asian guys were poor.
Yeah.
And then India, as you know, is those same English sons of a bitches who took over India. The British Empire, the sun never sets on the British Empire. Remember those days?
Yeah, you know, so you talk about August 15th, 1971, worst day for the dollar.
Yeah.
You know, what's funny is my grandfather, as I was growing up, told me about how August 15th was the day that he lost faith in the government.
Yeah.
My family is from a state in India called Punjab. And when that partition happened in 1947,
right,
they split up the state of Punjab, and the government lied to the people in Punjab.
Correct.
People who were living there, my family.
Yeah.
And so my grandparents, when they found out that the line was not going to be where it was, my grandparents lost everything. They lost their home. They lost family members. My grandfather saw people being killed. And that happened on August 15th, 1947. And then 24 years later, the same day, the United States
took the dollar off the gold standard. Nixon did.
That's crazy.
It's not only that, it's when I went to military school. So we studied different types of history. You look at the American flag, it's the flag of the British East India Company. The sun never sets on the British Empire. So Hawaii was a British Empire, India, Australia, New Zealand, America. It's really interesting to study history.
It is.
Not from the academic side.
They probably call you a conspiracy theorist.
Of course.
Are you?
No, I'm a historian. I like history. But see, when I came back from Vietnam in 1973, I got spit on, I got hit by eggs and all this by these hippies who went to the Woodstock generation, my own, baby boom generation. And here I am. I just lost a lot of friends and all this. We're fighting, we're killing communists in Vietnam. It was horrible. You know who's killed the most people in history? Communists. And that's who we're fighting. So Americans fight against people who murder people. So the sad thing about it is that we have a history that's not history. It's massaged. It's fabricated.
Well, they say the winners write the history books.
Correct. And so that's why you look at the American flag. It's the flag. That's why I love talking to you, because we're brothers here. Hawaii was taken over by the English. India was taken over by Australia, South Africa. It's the sun never sets on the British Empire. Well, why don't they teach us that stuff? Why is the American flag? They say, "Oh, Betsy Ross sewed it." Bullshit. Look at the flag of the British East India Company. You'll see the American flag. I'm trying to say something. 1930, the Frankfurt School out of Germany, which was Marxist, moved to Columbia University Teachers College, and that's where it started. in America. I'm a student of history. It's like, there was a guy named General Patton. We studied the great generals. Patton was a great general because he led from the front. Most generals led from the bunker, in the rear. That's why Biden, when he ran for president, he was hiding in his basement. He's a bunker guy. And Trump ran from the front. He had millions of people cheering and screaming for them. But the way it's run now is, I call him Basement Biden. He hides in his basement. He doesn't say crap. And Trump loses.
If you're looking for safety, you can't look at Bitcoin. Right? Even if you believe in Bitcoin, you must acknowledge that it is highly speculative. And you must also acknowledge the possibility that it goes to zero. So the only money that anybody should have in Bitcoin is money that they're willing to lose.